Good day, traders, and welcome back to another episode of Crypto Vibes with Walt. To start off, I'll talk a little bit about what we discussed in the previous episode, give you guys a recap. Then we'll look at some of the macroeconomic stuff and how it can affect the markets. And lastly, we'll then talk about we look at the charts and what we can expect price to do next. Now, as you can see, there's been an absolute destruction in the marketplace, be it equities, stocks, or crypto, which was mainly driven by or initiated by the CPI numbers that came out on June the 10th. The markets has been aggressively selling since then, and who would have thought that, right? Well, we did, because if you recall, I specifically told you on multiple occasions that the Fed were trying to destroy demand, that they were trying to curb the inflation, and in an attempt to do so, they wouldn't care if the risk assets gets completely annihilated. I told you what would happen once this range low gets broken, and lo and behold, as soon as price got below this, there was an aggressive sell-off towards the previous all-time high levels. So if you don't want to miss out on such updates that would give you an edge over the market, please subscribe to the channel and hit that like button to show your support. Now to start off, the Eurozone inflation numbers increased from an 8.1% in May to an 8.6% in June, which was due to the sharp spike in the energy and food prices, mostly due to the supply chain disruption that we've seen due to the Russia-Ukraine war, while the consumption and investment still remains below the pre-pandemic levels. The ECB are planning to do a rate hike in July of a 25 basis point, which is perceived as a hawkish stance or a hawkish outlook from a lot of analysts. However, if you look at the historical data, the central banks had to increase the rate well beyond the inflation percentage or the inflation numbers to curb down inflation. So a 25 basis point rate hike isn't really termed as hawkish in my books, or as per my understanding, because that is the bare minimum that a central bank has to do in order to curb inflation. Now, we've also had the US CPI number released on the June 10th, which was substantially more than what was forecasted, and a higher CPI at a time when Fed is trying to tighten the economy and is implementing quantitative tightening is very bearish for the risk assets, as they want to tighten the economy more. Now couple that with the low unemployment numbers that we had in the last month, and you have a very bearish Fed. So as you can see, let me just pull out the charts. So as you can see, the CPI numbers came out on 10th of last month, 10th of June. We saw a slight rally. So this was the 10th of June. We saw a slight rally in Bitcoin, which was basically to lure in more uninformed traders, and then the market absolutely tanked. Now, if you compare this with the traditional markets such as the S&P, you would see that the S&P started selling off way before the crypto market did. So this is where the S&P started selling off, which was on 9th of June. The CPI numbers hadn't released back then. The S&P and the traditional markets tanked, and when the CPI numbers came out, it sold off even further. Now, was the sell-off in an anticipated move because of the higher CPI numbers, or was it an insider trading move? I cannot comment on that. I won't speculate on that. However, since the traditional markets closed on the weekends, but crypto markets aren't, so we saw that aggressive sell-off continue during the weekend, which then resulted in price reaching out to the previous all-time highs. Now, another thing that I wanted to bring to everybody's attention is that all the forward-looking data is kind of pointing towards a recession, because the basic definition in technical terms of a recession is that when you get a negative GDP growth in 2 subsequent quarters, then that's a recession. Now, if you look at the previous quarter, quarter one, the initial numbers that came out were substantially lower as compared to what was forecasted. There was a forecast of a positive 1.1% GDP growth. However, it came out as a negative 1.4 GDP growth. Then the revised numbers came out, which was even worse, and then the final numbers were 1.6, a negative 1.6% quarter one GDP growth. Now, as I mentioned, all the forward-looking data is pointing towards a recession, because if you look at the GDP growth model, which was released by the Atlanta Fed, it is anticipating the quarter two GDP numbers as a negative 2.1%, which is further down from a minus or a negative 1%, which was released previously on June 30th. So that is technically a recession, and obviously if you deep dive into what a recession means, or the components of recession, obviously includes a lot more, like the consumer income, industrial production, consumption, employment, etc. But all of those, or majority of those at least, are also kind of indicating that US might be a recession. But quarter two negative GDP and quarter one negative GDP is sufficient. Now, moving on, let's look at the charts next. Again, now talking a little bit about the historical data, if you see or if you check the previous bear markets that Bitcoin has been in, there has been an approximate 80 to 90% of sell-off before we saw price bottoming. So we had a 90%, 91% sell-off in late 2013. Then in 2018, we saw a 83% sell-off. Then in the COVID markets, in the COVID times, we saw a 70% sell-off. So Bitcoin has already sold off around 74%, and an 80% or an 85% sell-off would send price towards the 10th to 11,000 region, and we will come back to this as to why this is important. But if you see, price is now, or let me just clean this up. Give me a minute. Yeah. So price is now breaking below the key range high, or the previous range high, the previous all-time highs, which has acted as a support. So once price breaks below this level, I fail to understand why it isn't a possibility or a probability that it doesn't tap the mid-range, or in a worst case scenario, a range low at least, because if this is a massive range, and once price breaks below this key level, we're once again dealing with this macro range. And what are some of the key levels of support within this range? It is obviously this level of untested demand that we have around 10 to 11,000, and then we have this key level of support that we have around again the 9,000 region. So once price breaks below this key level, to me it becomes a very high probability that we go for this untapped or untested demand, or at least this key SR before seeing a leg up, or seeing at least a bottoming formation. Now, one thing to note is that, or one difference that we have between the old bear markets and this bear market is the Fed. The Fed makes all the difference, because Fed wasn't implementing quantitative tightening. in the previous bear markets, while in this bear market they are. So the saying is that you do not stand in the way of the Fed, or you don't fight the Fed, because fighting the Fed is kind of like standing in front of a train and trying to stop it with your bare hands. So you'll get run over. So as long as the Fed is looking to curb inflation and tighten the economy, I don't think that we should be a buyer in these circumstances. Obviously, it goes without saying that we are in a bear market, so the probability or the possibility of price going lower than anyone expects it to go is very high. So coming back to the point, once it breaks below this key level, there's a very high probability that 10,000 to 9,000 would be next. And if it then breaks below this key region, then I think that it becomes very likely that price goes for these lows and then these lows next. Now it sounds unrealistic because obviously who expects price to revisit this region, but nobody expected it to come back and visit the all-time highs, right? And here it is. So just keep your eyes and your mind open to what price is telling you, and do not stand in the way, or do not try to catch a falling knife. Now, if I am to talk about bullishness, what am I looking for, right? I am looking for a deviation below this row. So price looks like it is accepting below this low, or has broken below this key level of SR. But if in the next few weeks, if this forms deviation and price can hold above this region, then I would be looking for a move towards the point of breakdown, which was around the 32,000 region. Let me pull out the chart where I have my levels marked. I think it will be very easy to explain back in this. Yes. So on a weekly, I guess somewhere around here is the previous all-time highs. No, somewhere around this region. So if this forms a deviation and price can close back above the old range high in the next few weeks, then first level of resistance would be around 23,000 that I'm looking for, and then obviously the point of breakdown where I will add, or I will be looking for aggressive shorts towards back towards the old range high at least. Because I don't think that on a macro perspective we are done with the sell-off, obviously because of the macro economic factors that I just explained. So unless the Fed pivots, I think we are bound to see additional sell-off and lower prices on Bitcoin and Ethereum and the entire crypto market itself. Now on the daily, again, the old range high in confluence with this level of support turn to resistance is the first trouble area I'll be looking for if price manages to move up. Now, one thing to note is that we have the next CPI report around 13th of July, I think. So I really expect or I really hope that the market can see some sort of a bounce at least, because as I just mentioned, the forecast for CPI isn't very good, and once the negative numbers come out, or the numbers come out, which obviously is very bearish for risk assets, I think that we would see an aggressive sell-off. So if price manages to break above and move at least towards this range or this level of supply, I think that we would get a much better opportunity to short than shorting at support. So this is what I'm looking for. Obviously, if price does not manage to move back at least towards this or this region, and it kind of gyrates around this level and the CPI numbers comes to bearish, it breaks below this key level of support, then I would be looking for aggressive shorts, right? So another region to watch out is this key low, because obviously it can sell off, breaking this key low, sweep these lows and then rally higher. So a few scenarios to watch out for in the next few weeks. Another confluence that I think we have at the 22 to 23,000 region is these equal highs over here. So prices obviously swept these highs. However, once there's a high formed at the key level of supply which is untested, there's a massive liquidity above there, because all the shorts, all the traders who would have caught this short would have had the stops around this level. So if price does manage to break out and move towards this region, I think this is a very high probability or a very high probability area to short the market. So this is what I'm looking for Bitcoin on the macro. I think the daily is covered because there's not a lot going on with the markets right now. Let me just quickly have a look at the H4. And so again, even on the H4, I don't see a very high probability of why price shouldn't move lower, because as you can see that price is currently bouncing from or currently at or consolidating at the H4 demand. So even if price manages to reclaim some key levels on the lower time frame, I think that it shouldn't go beyond the 22,000 supply that I just highlighted on the daily, because if price manages to reclaim this level, then there's a very inefficient move in the market that would be fulfilled very aggressively. So once price, which means that once price manages to reclaim this level, I think that there will be a very aggressive move towards the point of breakdown, or the previous, or the mid range, which comes out, or not the mid range, the range low, the previous range low that got broken somewhere around the 28,000 to the 29 to 30,000 region. So, but this is not looking very likely, because we have a jam-packed calendar this month, because we have the CPI numbers, the unemployment numbers, the earnings, and then I think the FOMC as well within this month itself, which there's like nothing positive about it. So I am not expecting price to rally right now, but obviously if I see some key levels being reclaimed, I won't shy away from taking a long. So this is what I'm expecting on Bitcoin. Let's quickly have a look at Ethereum and then we'll call it a day. Now on Ethereum as well, quite similar to Bitcoin, however, it has now Ethereum has gotten accepted below the previous all-time highs, whereas Bitcoin is still kind of around the same range. Now in Ethereum, when Bitcoin and Ethereum moves, you must have seen that Ethereum moves a lot more than Bitcoin when it is going higher, and when it is dumping or selling off, then as well Ethereum moves a lot higher as compared to Bitcoin. So that's why while Bitcoin is still gyrating or consolidating at this level, we see that Ethereum has broken below the key level of SR of a previous all-time highs. Now on Ethereum, we have this key level of support, the consolidation before price expanded higher towards the new all-time highs, which hasn't been tested, and we have all this inefficient move in between. So now that Ethereum has accepted or found acceptance below the key SR, I don't see a reason why price shouldn't sell off towards this region, which comes into around $400 on Ethereum, because there is no key level of support apart from obviously let me just mark it out more clearly. Apart from this key level of support that we have on the weekly, as you can see, price wigged into this level and then kind of got bought back. So break below this key level of support and then it's game over for Ethereum. I think it's going for this key level of support, which is in confluence with your mid range and around the $400 level. So this is pretty much what I'm looking for on Ethereum. Obviously, even though there is a very less possibility, but let's say for any reason price kind of rallies and finds acceptance above this region, then we can target higher prices and the point of breakdown, which comes at around the 2500 region on Ethereum. But I don't think that this is very likely, because obviously I've covered all the situations why we shouldn't see this happening on the risk assets as of now. So not much going on the daily, because we've already taken kilos. So we've taken all the liquidity, and yet price isn't able to rally higher. It has come back down almost at the level of I think of this support region, well, somewhere around this region, which isn't very bullish for the market in general, or any pair in general. So I want to see a quick rally higher, a break of market structure, and then we can talk about bullishness. But looking at the markets right now, I think it is very unlikely that we see high prices in the coming few weeks at least. But obviously we have sort of a double top or a key region of resistance on Ethereum. So break above, reclaim this, and then we'll target higher prices. But for now, I am not looking for longs, at least in the for a swing trading perspective at least. So just wanted to quickly go through the S&P as well, because while Bitcoin or the crypto markets has sold off aggressively, I think that the bear market on the traditional assets, or the S&P, like the S&P 500, has just started. Because if you see a high, a low, a lower high, and then a lower low, so this is just the beginning of bear market on S&P, and I think that 3500 is very likely on the S&P 500 next. So if S&P 500 sells off around 7%, then I think that it would be 3 to 4 times more on the crypto markets. So this is what I am looking for, and I hope that you guys found it insightful. If you did, just hit that like button, subscribe to the channel, and show your support. I will talk to you guys soon. Manage your risk, stay safe, and cheers everybody.